For most options traders, as they gain more experience, they naturally start gravitating to trading more options on futures rather than options on stocks. And the reason is futures options have some advantages over stock options. They have greater leverage, they have greater buying power relief, they have longer trading hours, but there is some negatives. There's a downside to futures options. And one of the things is when you're new, there's a pretty large learning curve. There's a steep learning curve because each futures product is so different than the next. Each of them have different expirations, different types of settlement, different multipliers, different trading hours. Each futures product is kind of its own thing. And you know, for a new trader, if you're brand new to futures and futures options, this can be confusing. So today we're talking about futures, expirations, and multipliers. We're going to talk about the differences among the various futures products. So the futures can be confusing. The futures can be quite confusing compared to equities like stocks and ETFs because each futures product is different than the next futures product. Each futures product has a different multiplier which determines the dollar value of each point of price movement. So what this means is when a stock moves up and down 1 point, that is exactly a $1 movement, right? If ABC stock is currently trading at $100 a share and it goes up 1 point to 101 per share, well, that's a $1 move, right? We know always a 1 point move in a stock or an ETF is always $1. That is not the case with futures products. Futures products have what we call a multiplier, and you take that multiplier number and whatever it is, then a 1 point move in it is actually that dollar value. For example, the ES futures has a multiplier of 50, meaning a 1 point move in the ES futures is actually $50. You should also note that not all futures products trade during the same hours, so they've got varying hours that they trade. Also, some futures and some expirations settle to cash, while others will settle to the underlying futures contract itself. And to add even more confusion to all of this, index futures expire the same day as the futures settlement itself, but commodity futures actually expire a number of days before the futures settle because they have to give you a grace period because with the commodity futures, there could be a physical settlement involved. For example, if you wanted to take physical settlement of crude oil or gold or wheat or live cattle, whatever it is you're trading, any of the commodity futures, you know, when they expire, there's a grace period of a few days, at least a few days before the settlement actually takes place. That way you can decide if you want to take physical delivery or not. Another confusing thing when it comes to futures is the monthly expirations and their letters. So each of the 12 months has a letter. For example, January is F, February is G. Right now we're in September as I'm recording this video. That would be U as the monthly designation. So if I go to my trading platform and I go and take a look at the ES futures right now it's showing ESZ as the current contract that is trading. So ESZ, what monthly expiration is that? Well, that is December. You see, December is Z. So when you look at your futures, they're always the actual futures ticker. For example, ES is /ES, but then it's always going to be followed by a letter and a number. The letter is the month and the number is the year. So ESZ4 is ES on December 2024. It's the last number of the year. It's 4. If I go into the options chain for ES, I can actually find other expirations that are trading other than ESZ4. So if I scroll down to further expirations, you can see I have a different last price and a different last price and a different last price. So these are out in time expirations. These are the future contracts past December 2024. So in this case, this is ESH5. So what is ESH5? Well, that would be next year's first quarter contract. That would be ESH is March and 5 is 2025. Now, typically, you're not going to have to go in and specify the month and the year on your futures that you're looking at on your trading platform, for example, in Tasty, they always are going to default to the front month that's currently trading right now, the active month. So if I, for example, look at /NQ, which is the NASDAQ futures, it's going to default to December 2024 because that is the contract that everybody's currently trading. So let's talk about assignment and settlement. So if I go back to the slideshow here, let's first talk about the index futures, which are probably the most popular products everybody trades. Everybody trades the ES futures and the MES futures, the NQ futures, right? So these are your S&P 500 futures, your NASDAQ futures, your Russell 2000 futures. The index products, they're all the same as far as how they do expiration and settlement. So when it comes to assignment and settlement on your futures options positions with the indexes, if you're in the quarterly months, so March, June, September, and December are the quarterly expirations. And if you're assigned on those, everything settles to cash. So you don't have to worry about being put a long futures contract or a short futures contract. Everything settles to cash on the quarterly expirations. Now, the non-quarterly expirations, you will be assigned a futures contract if you get assigned. And what futures contract are you assigned? You're assigned that quarterly, that upcoming quarterly futures contract. And then, of course, on the quarter, if you still have that, once that contract expires, if you have that futures contract, of course, it expires in March. And if you're trading options in that cycle, they will all settle to cash because there's no point in settling you to the quarterly futures contract, which is going to expire anyway. So that's why they all settle to cash on the quarterly expirations. They settle to the futures in the non-quarterly expirations. So that's the index futures and their settlement. What about the other futures options settlement? Let's talk about the agricultural futures. So that's your corn, soybean, wheat. They all settle to the underlying futures contract. There's no cash settlement. It always settles to the underlying futures contract. The same thing with the currencies. So your Aussie dollar, British pound, Canadian dollar, euro, Japanese yen, they all settle to the futures contract. Crude oil settles to the futures, but here's the thing, micro crude settles to cash. So it's different between the big crude product and the micro product. Natural gas settles to cash. The bond futures all settle to the futures contract. The metals all settle to the futures contract. So it's different. Some settle to cash, some settle to futures. But what you need to do, you actually have to go look this stuff up. You need to go find the settlement information on the CME website. Just go do a quick search on the CME website. The CME, by the way, is the Chicago Mercantile Exchange. It's the big futures exchange that all of these products trade on. So go to that site. It will give you the settlement for each of these products. Also, TASTYTRADE, if you're using TASTYTRADE as your broker, they have a nice little page detailing what settles to what as far as the futures products. Now let's talk about their multipliers. Now this is probably the most confusing thing for new traders when they first discover futures and futures options, is that 1 point is not $1 in any of these products, right? When these products move 1 point, that is not a movement up and down $1. In the ES, it is a movement of $50. In the MES, it's a movement of $5. In the NQ, the NASDAQ futures, that's a movement of $20. And you can see some of these have really big multipliers. For example, copper, a 1 point move in copper is actually $25,000. Now, that may seem strange, but copper is a low price product. A 1 point move is a huge move. You can see copper is currently trading at $4.33. So if it went up to $5.33, which would be a gigantic move, that'd be like a 25% increase in copper price, right? But that's a $25,000 move for a 1 point move. And I went ahead and charted the multiplier out for what I consider, some of the most popular futures products. Now, of course, I didn't list everything here. There's a million futures products out there. How do you go about finding the multiplier? Well, you can look it up again on the CME website. On TASTYTRADE, if you're using TASTYTRADE as your platform, one cool thing you can do is you can go to the Trade tab and then click Active, and then make sure you have futures CME. The CME are the big futures products, or you could go to futures all, so all the futures products that TASTYTRADE offers right now, and then just go find whatever future you want to look up. Maybe you want to see the heating oil futures. I have no idea what the multiplier is in heating oil, but I can click on that. If I move my head out of the way, on the side here, there is minimum tick. The minimum tick is 0.0001, and then notional 42K. So notional is the multiplier. That's what notional is. A 1 point move is actually $42,000. So that's all you have to look up. And for example, if I wanted to look up the multiplier in MNQ, which is the micro NASDAQ, the notional is 2. So the multiplier is $2. What does that mean? Well, that means that if I go and look up MNQ, so /MNQ, it's currently trading right around $20,000. The NASDAQ closed on Friday around $20,000, but the MNQ contract has a multiplier of 2, so this is not a $20,000 notional value for this contract. It's actually a $40,000 notional contract because each point up and down is actually $2 instead of $1. The big NASDAQ contract /NQ, that has a notional value of 20. If I looked it up on the chart down here, I'd also have to go find /NQ here, but I know it's 20 because I've traded it plenty of times. Notional of 20. So how big is the NQ contract? Well, you would have to take 20,000 and times it by 20, right? And that's a $400,000 notional value for the NQ contract. That's a big product, right? That's really a big boy product. You need a large account to trade something like this. So be careful when you're trading these futures. You really need to know what these multipliers are because some of these products are very, very large. So let's talk about the trading hours. So let's start with the index futures products. So the ES, the NQ, the RTY, the MES, the MNQ, all of that stuff. They begin trading 5 p.m. Central Standard Time on Sunday night, and they trade until 4 p.m. Friday. So they start Sunday night and trade until Friday afternoon. Now, there is a 1 hour daily maintenance period from 4 p.m. to 5 p.m. Monday through Thursday where there's no trading. So they have a 1 hour break each day, Monday through Thursday at 4 to 5 p.m. But essentially, they start trading 5 p.m. Central Time on Sunday and trade all the way until 4 p.m. on Friday. Now, thankfully, many of the other futures products follow the same schedule as the index futures products. So your energy futures, which are oil and natural gas, they all trade during these exact same hours. The metals, gold, silver, copper, etc., they all trade during the same hours. The bond futures all trade during the same hours. But then you get some really weird stuff. For example, the grains. We're talking about corn, soybean, wheat. They trade some really, really strange hours that I just don't understand. They start trading 7 p.m. on Sunday and they trade until the following Monday morning, 7:45 a.m., where they take a 45-minute break. And then they begin trading again at 8:30 a.m. on Monday and then trade to 1:20 p.m. And then they take another several-hour break where they don't start trading again until 7 p.m. that evening. And then 7 p.m. they trade till the next morning, 7:45 a.m. again the next morning where they take that 45-minute break. Yeah, it's just weird. Anyway, I got it on the chart for those of you interested in the hours for the grains. Also, cattle, hogs, they trade some weird hours. They trade from 8:30 a.m. to 1:05 p.m. Monday through Friday. So, they don't trade quite as many hours as the rest of the products. It's like the index and the gold and oil and all of that. And again, if you've got any questions as far as if you're trading a futures product and you're unsure about the trading hours, the multiplier, the settlement, look that information up on the CME website. So there you have it, a very brief introduction into the world of futures and options on futures. Now, if you want to learn more about options trading, and especially my favorite option strategy, which is the wheel option strategy, check out my book, The Super Wheel Option Strategy, which is available on Amazon. You'll find a link to that book in the description below. Also, consider subscribing to the DT Options Discord channel. We have a nice little trading group over there. We get together for the first hour of each trading day and we discuss possible trade ideas. We talk about what the market is doing, and we do a lot of trading as far as futures options trading. Right now, we've got positions going in MES and gold and wheat and corn. We trade some of this stuff, which is part of the reason why I made today's video, is because some of the folks over in the DT Options channel wanted this video. So I hope I was able to clarify some of the confusion when it comes to these futures products. Peace, guys.